Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 29th, 2025, and we're diving into Whirlpool's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Whirlpool, a leading home appliance company, has just released its Q2 2025 earnings report, and there's a lot to unpack, from sales performance to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Whirlpool reported net sales of $3.77 billion for Q2 2025, a 5.4% decrease compared to last year. John, how did this impact their profitability?
Despite the decline in net sales, Whirlpool managed to achieve a GAAP earnings per share of $1.17 and an adjusted EPS of $1.34. The net earnings margin stood at 1.7%. This indicates that while sales were down, the company maintained a focus on cost management and operational efficiencies.
That's interesting. How did they manage to keep their margins stable?
Whirlpool delivered significant cost reductions, approximately $50 million, which helped offset the impact of lower sales. Their ongoing EBIT margin remained steady at 5.3%, showing resilience in their core operations.
Segment performance and strategic initiatives. John, can you break down the performance across Whirlpool's different segments?
Absolutely. In North America, sales were $2.45 billion, down 4.7% year over year, mainly due to negative consumer sentiment. However, the Asia segment saw an EBIT growth of 11.2%, driven by strong market share gains. The SDA Global segment also performed well, with a 32.9% increase in EBIT, thanks to strong direct-to-consumer sales and new product launches.
It seems like their strategic initiatives are paying off in certain regions.
Yes, particularly in Asia and the SDA Global segment, where they have capitalized on favorable price mix and new product momentum.
Financial health and debt management. Let's talk about Whirlpool's financial health. They refinanced $1.2 billion of term loan debt. How does this affect their financial position?
Refinancing at a weighted average of 6.3% helps Whirlpool manage its debt maturities more effectively. However, their free cash flow was negative at $856 million, and operating cash flow was $702 million, indicating challenges in liquidity management.
What steps are they taking to address these challenges?
Whirlpool is focused on executing cost reductions and strengthening their balance sheet to ensure financial resilience, as highlighted by their CFO, Jim Peters.
Future outlook and guidance. Looking ahead, what is Whirlpool's guidance for the rest of 2025?
Whirlpool has updated its full-year guidance, expecting ongoing earnings per share between $6 and $8, with net sales around $15.8 billion. They also aim to achieve $200 million in structural cost reductions and have recommended an annual dividend payout of $3.60 per share.
That's quite a comprehensive plan. How confident are they in achieving these targets?
CEO Marc Bitzer expressed confidence in their long-term strategy, particularly with evolving tariff policies expected to support domestic manufacturers, which should bolster their North American operations.
Key takeaways. In summary, Whirlpool's Q2 2025 results show a company navigating challenges with strategic cost management and a focus on long-term growth. John, any final thoughts on their investment prospects?
Whirlpool's focus on cost-cutting and strategic initiatives in key regions like Asia and SDA Global are promising. However, investors should keep an eye on their cash flow and debt management strategies.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Whirlpool's performance in the comments below.